Good evening. Ira Epstein with your Metal Market Wrap-Up, and this wrap-up is for Thursday, the 9th of June, 2022, and the time 6:45 p.m. Central Time. So, a little bounce tonight, but a big break in the stock market. What caused it is the big question. You look back on it, another central bank, the European Central Bank, joined ranks, quarter-point hike coming in July, and then September. They don't have a meeting in August. They might go a half point, they might go a quarter point. That wasn't enough to create this break, in my opinion. Here's what I think. I think you're just looking at the landscape. Everybody, all the central banks are raising rates, and we get a CPI number tomorrow. Everybody's scared that there's going to be a red-hot CPI number. And all of a sudden, in front of it, that's what I'm thinking, the market just let go. I'm amazed when I was doing the numbers today on the Spider ETF subscriber video, how many markets are under now the 18-day average of closes. It's landslide how many are under it. So you have your bearish bias. Okay, that makes sense. In the gold is trying to hold on. There was a safe haven bid into the dollar, as you can see. Currencies got walloped. As against the dollar, nothing stayed up. Every currency pair that I look at fell. So be it the yen, the Swiss franc, the British pound, Mexican peso, it didn't matter what you were looking at. They were all getting hit. Bonds and notes adding to yield. A little bit of a decline, but we got into the 430s in the Rebob gasoline. You're holding firm in the Brent and the WTI, and you probably overdid it on the downside when you approached the $8 in the nat gas. And I understand. I think people have to get their arms around the fact that this is a 2 to 3 week event. They say 3, it could be shorter possibly. And then that natural gas, is going to go back to the export market. So for that window, does it really change everything? Nah, it's noise in the market. But traders, they don't understand how to handle those things, and I've seen that happen before. So let's go over here. Instead of the news, go to our first chart. In the gold, if we can get a rally, maybe you get up to the 1900.80. That's what I'm hoping to see. The market is still stuck in the sideways action. The pattern is one of higher lows, but with today's action, it got a bit uglier because now you got lower highs. So instead of the nice, clean action of higher lows, higher highs, now you're mudding the water. The market is holding the key support of 1849.10 to 1850.40. That's the action. You can see where you're at right now. If you start taking out the low over here under the I think it's 1838 level. In fact, we can. Let me just see. I'm not going to be able to get to it. I can see that. I know what I did. You'd have to get under that in order to be a bit bearish. When we come over here and we look at the Bollinger Bands, we're going to repeat. I think if you rally, the first resistance is going to be here at the upper Bollinger Band of 1873.80. And if you break down, getting under this low, I think you're going to the 1827 level. Those are the two parameters I'm seeing. On the upside, if you can keep going through that, if it develops an upside, then the 100-day average does tie into that 1900 level on the weekly chart. So at least I know the resistance zones and the support. I'm going to give the nod to the bulls on the close. The question is, can it hold it? In momentum is still drifting to the downside. So tonight we got flat bias, maybe a little bit down, the trend up, momentum still pointing down. A really mixed chart. The gold-silver ratio, you want sliding right through the 18-day average of closes, so silver's taking a good beating against the gold market, but I don't think it's going anywhere on the downside. You're now down to the lower Bollinger Band. If I were a bear, I'd be covering my shorts, saying just what I told you. The market's winding up to do something. In the copper, I have been looking for a correction, and it's going right back to where it should, the red line. Why? The 18-day average, which is this red line, I call the line in the sand. It is the demarcation point for when the market is over it, you're using a bullish bias and a filter to be bullish, and when it's under it, you have a bearish bias. So when you're up here and you hit the 100-day average, the upper Bollinger Band, And the first time you do it, if you've taken my enhanced Bollinger Band course, the market is screaming, get out. It is not screaming, buy more. And you're getting your correction. Overbought, hit these numbers, and you're pulling back to the neutral number to see what you do next. Then we get over to the platinum. So we have higher lows, higher highs. Again, you got to the Bollinger Band and the 100-day average, and you certainly acted like you were just going to run to the moon, right? You never stay over the Bollinger Band more than 5% of the time. Could you hit 5.5? I imagine you could mathematically, but you're going to pull back. And neutral numbers, the 18-day average, the trend is still up. In theory, it's too much dollar risk. The pros could be buying here with a stop way back under this low here of the 922 level. It's too much risk in my opinion, but it's a possibility. And in the palladium market, when you get to a lower Bollinger Band, I believe the professional money covers all their shorts when you're not embedded. Embedded means you've got the blue and the red lines going sideways under 20, locked in to a bear trend. You're not there. I'm looking for them to have stepped away and just say, I'll play this game another day. And in the, let's see if the next chart, if I can get that. That was the palladium. Here's the dollar index. Again, I'm just learning this new toy. Higher lows, higher highs. I'm looking for the 103.70 level, about 40 points higher, 50 points higher, to be the big, I don't want to go any further to the upside. You're getting overbought. Market coming up to that number, I think professional money will dump it. But we know that tomorrow at 7:30 is the CPI number, and that's going to be the big, if you will, the big kahuna in the room. And being the big kahuna, let's talk about what I've got for you here. You know, here's a futures trading kit that includes our charting software. The pivot points are in this, chapters to get you started trading. I've put this together, and it's one of the coolest things if you're looking, hey, I want everything in one spot. The tools for the beginning, trading rules, chart patterns, money management discussion. Money management is so important, nobody talks it. I created the cause and effect when Paul Volcker, you heard me, Paul Volcker was our Fed chair. It's as good today as it was then. I'm looking at money supply and other parts. What about chart patterns? Well, I give you a PDF of the 14 the most common, how they generally resolve themselves. Then we're going to take you to the CME courses, Bitcoin, all the other courses they have, ways to trade it, all the mini markets, economic events, trying to put this all together for you. So if you'd like to get it, it is so darn simple to do so. All you need to do at any point is either call us at 866-973-2077, go to our website, www.iraepstein.com, or just take your cursor, move it up here, an icon will appear, click on it, take you right to our free offers, and away you go. With that, I'm Ira Epstein. You have yourself a very good day. I will see you all in my next video tonight as we do more wrap-ups, and of course in the morning, financial futures news videos. Take care.